All right. Good morning, everybody. And the wait continues. We're still waiting on NVIDIA to report earnings, and it's a long wait. We still have all of today and all of tomorrow. We went through this last time, and after the second day, it was like, there's no way we're going to go another day waiting. And yet, we did. The ranges are still set. The volumes are really light out there. And now we're just waiting on it. There was a little bit of news on Apple internal personnel shift, and it dropped a little bit, but it's mostly recovered already. It's just a knee-jerk reaction, a little bit of algo trade, but it's already come back around. Markets are sideways. The weight is starting to spread out around the world. We're just going to sit in this holding pattern. We do have the 2-year auction today. I wouldn't discount it. It's at 1 o'clock. Anytime we have an auction at one time frame, just assume that we have them at the other two, which is 11 and 11:30. Manufacturing, not to be discounted. It's not the big data points, but it is data points, so we want to keep our eye on. Dowley was out yesterday parroting the party line, basically saying everything that Powell had already said. So no surprise there. Seen some wild moves in the dollar yesterday. Got below 101. You can see down at the bottom of the screen, US dollar Japan kind of getting a little wild. But really, I mean, we got nothing. It's all a wait on NVIDIA. On the one hand, that makes it really nice. You can do, like 0-day iron condors, do one in the morning, do one in the afternoon. The problem is the threat of doing it, right? In such a low volume environment, it wouldn't take much to spark this massive move in price, and it would eventually mean revert. But would you be able to hold, if you go too big on that iron and then you actually start taking some real heat? So we got our ADR levels. Right now we're below 100, which is kind of nice, but we're still way farther than the daily expected move or the daily 1 standard deviation. And if we're going to hold the range, we still expect that we won't even get to those red lines, let alone hit them or go through them. Thursday is still the boss. Everything's staying inside of Thursday's range. And if you look at it, there's not much room left to the upside if we're going to stay in the box, but there's plenty of room to the downside if we're going to stay in the box, right? And that's the threat. We started to sell off a little bit yesterday, and I've seen a lot of people say, oh my God, yeah, we're going to short this sucker. There was nowhere to go, right? Where were we going to go yesterday? To Friday's low? Okay, but then what, right? And if you look, Friday's low, sure, that's where we got our first bounce, and we came up into VWAP, and then we broke that because Friday wasn't the candle of control. It's not the boss. Thursday is. Where did we go? To the halfway point. So Friday's midpoint was just a stopping point along the road. Destination was the half. That half doesn't have to hold because it's only part of the range. And if we're going to hold the range, it wouldn't surprise at all if we use all of the range. We have all of today and all of tomorrow before NVIDIA reports. So plenty of time. This market needs to shake things up a little. And that would at least make them feel like they're accomplishing something, right? They're moving, they're getting it going. but it's a 40-point range from 56.23 down to what, 55.83. Not much to it. So we're at the half. Thursday is still the boss. That's the range of control right there. And of course, we just had an inside day, and we're inside of that day now. So we can mark those levels out. 56.44 is the level to get through if we want to retest yesterday's highs and see if there's any liquidity left up here. I was writing up a blog post on measuring things, and I was using yesterday as a great example of just simple things like a halfback and marking things out like this liquidity zone up here, this sell zone. So everything's functioning the way it's supposed to. Prices are moving to their measured moves as they're supposed to, and we're just in hurry up and wait mode with no expectation at this point of even getting to a red line, let alone getting through it, unless we get some outside news, some shock and all, right? Markets don't like surprises. So if we get some, data that we weren't expecting, then it's possible that we could see a big move or an outsized move. We don't have the AM founders note yet. When it comes out, of course, I'll send it out to everybody. Looking at the central pivot ranges, we're still inside the floor pivot for the week, the channel from that pivot, right? So if we were to turn off the daily, for an example, this cloud is the weekly cloud. It's the channel around the weekly pivot. And that's what we're sitting inside of right now. Now flip that around. This is the daily pivot channel. It's within yesterday's pivot channel. And sure, the two pivots are slightly higher than the other, but price opened up underneath it, which is bearish. And the fact that they're overlapping isn't bullish. It's not necessarily bearish, but it's certainly not bullish. And it highlights that really tight range and the lack of participants, the hurry up and wait mode that we're in. Don't let that low VIX fool you either. VIX is the worst thing in the world to try to gauge, quote, volatility out there. Price movement is your best gauge of volatility, and the lack of movement is a threat, right? It's a significant threat, because when a market is going sideways, it's gaining energy for a move. We don't have any sort of crystal ball to figure out which direction it's going to move either. I've seen a lot of enthusiasm over NVIDIA earnings too. Some very bullish people who just blindly decide that NVIDIA is going to beat. And I don't think a lot of people are arguing that it's going to beat, but will it please? Right? It has to do more than beat. It has to come out with such stunning numbers that it's still considered good. Mediocre or inline numbers aren't going to do it. And there's an issue with a chip that they're making. I think it's called the Blackwell chip, and they're still not online with making that chip, and it's one of their main products. So there's some issues, right? Then if you think about some of the biggest buyers for NVIDIA, like Microsoft, Google, Apple, whoever's buying it, right? And there's some good numbers out there, some articles that really lay out how much Microsoft and Google and all those guys have been spending. That spending, that CapEx, has been reported by those major companies that, hey, we're going to slow down on this spending because they're getting punished for it, right? Google had great earnings, but they spent a boatload of money and they got punished for it. So some of their forward guidance is over the next 4 quarters, we're going to cut back our spending on NVIDIA products. Well, what do you think that's going to do to NVIDIA's forward outlook? And NVIDIA has to come in with a forward outlook that's really positive and that pleases investors. So I'm not saying they're going to fail. I'm not saying they're going to go down, but I am trying to caution people against this exuberance that makes them blindly decide that NVIDIA is just a long and that it's going to the moon, and so is everything else. It's not set in stone that this is what's going to happen, right? There are some reasons to be concerned. And if you're thinking, I'm here for the future stuff, man, I don't care. You better care, because the futures are going to get hit too, right? It's going to move the futures just as much as it moves everything else. So we've got last week's profile, and we came down and tagged the point of control for last week, overshot it and got back above it, and then tested it again. We expect a lot of trading there because it was where the greatest amount of trading took place last week. And it's a little bit of trader's remorse when we go back and revisit those levels. How many more traders are left there willing to buy it back up? That's the question, right? So 56.25, nice, easy number to remember. If we cut below that, it's your alert. And if we cut yesterday's low, then that's your trigger for a continued short. Get through Friday's low, and you have a green light to continue, get through the roundy, 55.91 cog line, and then Thursday's low. Now we can wick outside of Thursday's low, just like we wicked outside of Thursday's high. A range-bound market is supposed to press the edges on each side. So nobody's saying that we're going to run down and tag the low and bounce off of it perfectly. Price doesn't see that line, right? And you can draw one there, but nobody sees it. Nobody cares where your line is. We can overshoot that level because liquidity resides on the other side of the pivot, right? Just going to keep saying that until it sinks in. Liquidity's on the other side. It was on the other side of the top, and if we get to the bottom, it's on the other side of the bottom. So an overshoot of Thursday's low wouldn't send us into a tailspin and break Monday's low and continue lower. It would just be where we would expect the reversal and then move back up inside the range again, waiting on NVIDIA. It's worth keeping an eye on our current week's profile to see if the point of control gets shifted any lower. If we can get it shifted down into that 56.20 area, it would look like a nice iceberg and would provide some structure down there. Without that, the value area high and the value area low is a really good example of the range that we can stay in and just keep crossing back and forth through this point of control with no insight for support or resistance or anything like that. We'll just keep cutting through it. If we break out of the value area high or low, and then we come back, then we could consider it a support or resistance level, depending on if we're above or below. Wait, I like that. Yeah. Hey, it was funny the other day, screwing around with AI, and it's always giving you little prompts, right? So it says, ask us to write a song. So I said, okay, write me a song about the dollar and Bitcoin. It wrote a rap song, but hey, it is a song. It's kind of funny. Should I ask for a haiku? So the overnight volume 46, that's better than yesterday, but it's still like a ghost town out there. There's no liquidity, there's no activity, there's just nothing going on, right? Waiting on NVIDIA. Could make the morning briefing over the next 2 days 5 minutes long that just says we're still in the range, waiting on NVIDIA, see you tomorrow. All right. It's really just that. Ta-da, done. But it's good practice to go through the steps anyways. You never know what sneaky little thing may pop out. What one thing I might say that turns on a light bulb for somebody and they got a little aha moment. 10-day, 30-minute volume profile. The point of control is still where it was. Not expecting this to move anytime soon. Really no great insight on this chart. And if we were to consider it anything, it'd probably be a capital P with the point of control in the D shape of the profile. If we break out of the value area low 55.50, we do have a little structure back here around 54.50, but you know, if you read spot gamma, we get down into those levels and it's like the point of no return kind of stuff, crash and burn, flash crash stuff. So let's just not do that. This morning's profile is more of a D shape, as we would expect. Yesterday, if we discount this Globex zone here for a moment, that would be a really nice lowercase b with profile. There's just not a lot of structure here, right? Even that upside move, I don't think anybody's really expecting that we're going to get through these zones before NVIDIA anyways. And distance from the 10 should continue to improve because we're sitting sideways and giving that 10 time to come to us. This is a correction in time rather than a correction in price. There's a lot of products now that you can trade. And if you're thinking about taking a little bit of a flyer on NVIDIA, there are these double and triple leveraged single ETF plays that you can do, right? Like NVDL, for an example, and it actually has weekly options and it's about $65 a share. Or NVDU, I think. Which one is that? NVDX. That one's like $16 a share. It doesn't have good options, but it has a really low share price, right? $16. So you could easily defend that with a put. And it doesn't matter that it doesn't have weeklies if you're not trying to trade the option as the main trade, right? If you're trading the stock and then defending it with a put, then weeklies are okay, or not having weeklies is okay. It's not great, but still. So there are ways that you can play this, or you can do something like SMH. 25% of SMH weight is NVIDIA. So 25%, that's huge. So you could play something like that. The prices are all jacked up though, right? I mean, you're talking like $10 a contract on a lot of the NVIDIA connected stuff. There's a NVIDIA AI web picture that I've shared out before. I added Oracle to it. It wasn't on the list, but there's a lot of companies that would benefit from a NVIDIA win. So if you are wanting to take that route, maybe don't trade NVIDIA itself, but trade one of the proxies to it so that you can minimize your risk and your exposure. It was interesting yesterday that the other 495 stocks out there were doing just fine, right? All the tech stuff, the Mag 7 and everything was just really weak, sideways, wasn't getting a lot of assistance. You look at things like the Mag 7 or the NY Fang. And okay, yeah, even financials were a little weak, but they opened, gapped up, and then they just faded back down a little bit, kind of stayed under the VWAP all day, but they held that high. Not like NY Fang that opened flat with Friday's close and then broke out of Friday's range before coming back inside and holding the line. You could see the advanced decline on the NASDAQ yesterday. It started positive, but everything just continued to fade and bleed. Same thing with the S&P 500. It opened okay, but it was just a constant bleed. Cumulative tick, same thing. Take a look at the regular tick and the weighted AD. We couldn't really get below that minus 250 level and keep it. And if we can't expand here, then we won't expand in the S&P, the NASDAQ, right? Those breakouts won't stick and we just come back in again. We were mostly red in the ticks with little shots to the upside. One print at minus 1,000 kind of shut that move down when we were dropping into the lows. It was this one. So these candles right here triggered the pause warning, and then we paused based after hitting that level. Just nothing out there, right? Bitcoin's down 1.5%, but it's still up more than 6.25% over a 5-day period. So it was up 8%. It's still up 6.25%. It's down a bit, right? Same thing with the other Bitcoin. Both of these are Bitcoin. Looking at things that are up. What's the China ADRs, the KWeb, and then the other China ETF. KWeb's like their internet ETFs, right? Consider it like our XLK kind of. Whereas the MCHI is more of their broad market. I'd hate to say consider it something like our SPY, but just consider it, maybe like like a Dow or an IWM kind of thing. Still the index. It's a broad outlook of their whole market. And that's it. You get through the China ADRs and a little bit of VIX, you got nothing else. We need at least 0.5% to focus on. So FXI, China big move to the upside. China Internet ETF, KWEB, a small move to the upside. Emerging markets, which is also China, another move to the upside. But not much, right? It's just more algo prints than anything else. It's probably a rebound reaction from PDD yesterday, right? No, it's not PDD. That thing was a bleed, right? That's a pretty awesome move. I had a number of people asking about, was this going to mean revert? And very likely it's going to make some pop to the upside, but this thing is seriously broken, right? So if you are trying to run along off of this low, I would be fast with it, right? I like the word nimble. I would be nimble in that trade because sure, it's very likely going to bounce into resistance and then roll over and continue to move to the downside, right? There's a phrase that says if 80, then 100. Well, that works the other way around too. If 100, then 80. I know those kind of funny little phrases, they seem so generic and, like no way that it works that way, but you'd be surprised how often it just does. Baidu with a little bit of a pop. JD, okay, that's where we're getting some movement in the China ADRs this morning. It's from JD. A little bit of a pop to the upside, inside day breakout. It didn't stick. We're inside the range again. We have this thing, these inside days. And if you get multiple inside days in a row, the phrase is IX10, right? So if the range is really wide, it's not an exciting IX10 because there's no compression. And we really like compression because it often causes big moves on the other side. Whether you're using squeeze indicators or you're just measuring price, however you want to define compression, consolidation, a pause in the move of the market. If we pause inside of a really big candle, who cares, right? There's no compression because it's such a big range. So staying inside of Thursday, which is a good size range, not overly exciting. But then you look at Friday and the range is smaller and we've got more compression. And you look at Monday and the range is even smaller still and we've got more compression. So right now, if we're only looking at Monday and this is Tuesday's little blue spinning top or doji bar there, we don't have an IX10 because it's just one day that we're inside of. But it's a really tight range that we're inside of here, this 50 points. And on the last NVIDIA earnings, our range got so constricted that it was 25 points for the entire day. That'd be tomorrow, right? We're sitting around waiting. It's just going to get tighter and tighter. It doesn't have to. We can expand and then we're back to using all of Thursday. But for the moment, Monday is your closest sideways bar to mess with, right? Your inside range. That's the inside day that you got to deal with. We already tested the half. That failed. So if we can break this low, then we can test Friday's low, then we can test Thursday's low. There's a statistic on the ES on how often we break outside of the daily range, right? Let me see if I can find this statistic. All right, so this is a company called Edgeful. It's not free, but it's useful for someone like me, a little bit of a nerd. I want the numbers. So we're looking at the ES, because you can choose, what do you want? Futures, stocks. So I got futures here, but we don't want a gap fill. We want inside bars. This is the number of times in the last 6 months that we had an inside day. It means we stayed inside the previous day's range. 9% of the time, we don't break out. Now, just because we broke out doesn't mean we closed out, right? That's a completely different number. Did we even get the breakout? 9% of the time, we don't break out, which means 90% of the time we break out. Hitting both sides, 12% of the time. That's some little bit of insight there, sure. So there's some numbers behind it all. The idea that this very tight, very constricted range that we're in right now, it's not common, it's not normal. And when we come out of it, it's likely going to be a doozy. But we got to do that first. Pot stocks are down 12%. Oh, okay. So while we're waiting on NVIDIA, the indexes are going to be out of play. The Mag 7 very likely are out of play. And that leaves, quote, anything else. Commodities, oil, gold, copper, and things like bonds. So keep your eye on the dollar and the 2-year today, the 2-year auction. Try to stay awake. Certainly nothing wrong with just, backing away, avoiding any trades until we get NVIDIA's earnings, and maybe just do some studying or something. On one good note of all of this is that price is working exactly as it should. It's going perfectly to the measured moves, stopping there, liquidity's where it's supposed to be. That's all working out really well and good. Even the CTA buying started to pick back up again. If you guys caught that, they were fading it out. Here's the table. So a month ago in the ES, they were at 2.2%. They faded it out. It actually got below 1. And now they're picking it back up again. In the NASDAQ, well, they're still growing, but it was down. Then it started to pick back up. So some buying in that area. And this is just a snapshot of where we are today. It's a little easier to see where we've been, right? So then you look at something like the chart. The SPX here is in white, and the CTA's positioning is in green. So we just kind of zoom in a little bit. This is a daily chart. We can see that little uptick here where they're working their way back up. Higher highs, higher lows. If we run up and get one more high, then we'll have two higher highs from this high. And we'll have two higher lows. That's a full set. That's a trend. But we got to get it first, right? Yeah, we got it on the NASDAQ too. So that's the SPX. This is the NASDAQ. Same thing. They were even below the zero line here, but they're running it back up a bit. And you could look at this and say, well, it's just a knee-jerk reaction. They fell a long way. It's like a dead cat bounce. We're popping back up some. I couldn't necessarily argue against it. Halfbacks work on this just as much as it does on anything else. You can see back here where we had that really deep drop, and we got that halfback here was rejected and fell back down, but we set that higher low and we kept it and continue to move to the upside. But halfbacks work everywhere. That's the whole point, right? So we're not quite to the halfback on this current drive. That's something to think about too. We are going to lose a lot of that dark pool flow and that just behind the scenes buying. We're going to go into a stock buyback blackout soon. So there's that. And if the VIX doesn't fade out of NVIDIA after the earnings, I mean, if we don't see a fade in the VIX, then we may see a shift in the volatility control funds, the VC funds, and how they're allocating. So that's why I got, guys, watch the clock, be careful, realize that we're in a nasty trading environment and it's going to be expected to be very sideways. Waiting on the video. I'll see you tomorrow.